Hi guys, I'm glad you're all here. Thank you very much for joining me. Recent talk among prepper groups has been telling people to stockpile to the rafters. We're in the midst of a recession, which I think is going to be heading for a Great Depression, which I hope it doesn't happen. We're all familiar with the unemployment, the poverty that happened during the Great Depression, which they say started here in the United States and then spread around the world. This here is the image, what they call Black Friday, when the stock market crashed. There's a lot of similarities to what's currently happening and what happened in the past. Here on Wikipedia it says, economic historians usually consider the catalyst of the Great Depression to be the sudden devastating collapse of the U.S. stock market starting on October 24th, 1929. However, some dispute this conclusion, seeing the stock market crash less as a cause of the depression and more of a symptom of the rising nervousness of investors, partly due to the gradual price declines caused by falling sales of consumer goods. What we got is hyperinflation as a result of overproduction because of new production techniques, falling exports, and income equality, among other factors that had already been underway as part of the gradual depression. We got the current economic woes coming because of China has pretty much cut us off from receiving their cheap imports that we have become so reliant on. And then we got the sanctions and the retaliation for oil and gas and fertilizers, things like that. Then there was the Smoot-Hawley Tariff Act, where they put taxes on imports. This reminded me of the current sanctions. The act prompted retaliatory tariffs by affecting states against the United States. The act and tariffs imposed by America's trading partners in retaliation were major factors of the reduction of American exports and imports by 67% during the Depression. Economists and economic historians have consensus views that the passage of the Smoot-Hawley tariff worsened the effects of the Depression. So I thought I would look up the gross domestic production. Here in the United States, it's 1.6%, and we know we've been in a decline for the last 2 quarters. Libya, minus 18.5, Algeria 4, let's see, Canada 3.3, Russia, yeah, they're down 3.4%, and let's go to France 2.5, Germany 1.5, Czech Republic 1.9, Ireland's doing good, 9. United Kingdom 3.6. Let's see here. What else we got? Spain 4.3. Portugal 6.2. Yeah, they're all doing so much better than us here in the U.S. We'll just jump around. China 3.2. They're doing better than us. India 6.8. Australia 3.8. So here we have the gross domestic product. Gross domestic product, third estimate, GDP by industry and corporate profits, revised second quarter of this year. And you can see how the United States, it's dropping significantly. When you look at these other countries that have 6% or even 3 point whatever percent, the United States, we got some bad stuff coming. But then today, looking at the banks there in the UK, here on Reuters it says Credit Suisse prepares Swiss business sales to raise capital, Financial Times reports. Or maybe it's pronounced Sweets. Credit Suisse is preparing to sell parts of its Swiss domestic bank as it attempts to close a capital hole of around 4.5 billion Swiss francs, or 4.48 billion US dollars, the Financial Times reported on Saturday, citing people familiar with the matter. The parts that are being considered for sale include a stake in the SIX Group, which runs Zurich Stock Exchange, and 8.6 holdings of the Madrid-based tech company Allfunds, 2 specialist Swiss banks, and it gives their name, which I'm not going to even try and pronounce, and Bank Now, and Swiss Card, a joint venture with American Express, and the newspaper added. The bank is also looking to sell its famed Savoy Hotel, located, wherever, in the center of Zurich's financial district. The hotel could be worth 40 million Swiss francs, as reported by finance blog Inside, early this morning. Credit Suisse is considering cutting around 5,000 jobs across the group as part of a cost reduction drive, a source with direct knowledge on the matter told Reuters in September. The Bank of England might raise interest rates by more than it previously thought because of the government's huge energy bill support, which could lower inflation in the short term but push it up further ahead in whatever it decides to do on tax cuts and spending. The Bank of England raised rates by 0.5 percentage point in August. At the time, it was its biggest increase in 27 years, and did so again in September with inflation around 10%, so far above Bank of England's target of 2%. He said the Bank of England had acted after the violent market moves which exposed the flaws in the strategy and structure of a lot of pension funds. They evidently, if I'm not mistaken, put them into bonds, which have dropped a lot. I could be wrong, but yeah, they put the pension funds in something that just didn't pan out. Yeah, in the very near future, retirees could be losing their pension funds, their IRAs. It's gonna be bad. Back in the 1930s, the population was a whole lot less than what it is now. The world's population was about 2.0 billion people in 1930. And right now, it's $7.9 billion. Most people lived in small towns. They grew their own food. They raised their own food. Nowadays, most people live in cities and towns, and they do not know how to grow crops or raise animals or even how to plant a seed. And they're too lazy to even learn, too lazy to do the work to produce their own food. With a drought going on in so many areas, we got crop failures, water shortages, fertilizer shortages. It's bad. About 50% of the crops around the world have been lost this year. Here on the BBC, it says the turmoil on UK financial markets has intensified after the Bank of England insisted its emergency bond buying scheme would come to an end this week. The cost of the government borrowing over 10 years briefly surged to its highest level since 2008. Yeah, we all know what happened back then, as investors demanded higher returns to lend to the UK. Yeah, Monday might be a bad day for the stock market. It says here, if there is further market turmoil on Monday after the bank pulls out on Friday, Andrew Bailey has put himself in a very tight corner there, she said. If this does all break loose on Monday, and we will have a very risky financial position, what are the Bank of England going to do? And I think they will need to step in. The immediate consequence has been the mortgage rates on new loans jumping to their highest level in more than a decade and a half. This year was already proving tough for bond markets well before Liz Truss became prime minister. The lingering impacts of the pandemic on supply chains, coupled with a sharp rise in global energy prices following Russia's invasion of Ukraine, well, they were going up before that, had already pushed inflation to the highest level seen since the 1980s. To bring inflation down, central banks have been raising interest rates to slow the economic demand and to attempt to relieve some price pressures. The FDIC has a list of bank failure list and gives the date. Let me bring this over a little bit. There's like 47 pages of them. I don't know if there's anything more recent than 2020, but there's 4. We got Kansas, Florida, West Virginia, and Nebraska, it looks like. Then 2019, New Jersey, Ohio, Kentucky, Texas, and then 2017, we got Illinois, Kansas, another one, Illinois, and Wisconsin. I'll give you a link to this. Bank failures in brief. And this goes through 2001 to 2002. And you can see here, 2008. Total assets is green. Let me bring that over so you can see that. And it looks like the last 2 years, well, this year's not over, they haven't had any bank failures, but in 2020 there was 4. 2010 there was 157 bank failures. Let's see, 2008 we got 25, and then in 2009 it jumped to 140. Another paper or page from FDIC, it says net income decline year over year. Net interest margin widened. Loan growth was broad-based. Credit equality remained favorable despite growth in early delinquencies. Total deposits declined moderately for the first time since second quarter of 2018. Community banks report a moderate decline in net income. Community banks reported a decline in net income from a year ago quarter. Community banks reported a decline in net income of $223 million, or 6.5%, from the year ago quarter, resulting from higher non-interest expense, lower non-interest income, loss on the sales of security, and higher provisions for credit losses. Most of the 4,333 FDIC insured community banks, 52.0%, reported lower quarterly net income compared with a year ago quarter. Net income, however, increased by $583.6 million, 8.4%, from the first quarter of 2022. This here is an image from the 1930s of a workhouse, men looking for work there in London, and a soup line. The difference between then and now is there wasn't riots like they have now. People taking from others, stealing from others, the smash and grabs in stores like they have now. The government started all kinds of different work projects to put unskilled laborers to work and to educate them what to do. Both of my grandparents did that. Here's an image from the WPA, and I thought it was interesting that this fella here seemed fairly well dressed compared to the other ones, yet he's got a shovel and, moving rocket looks like. But when they start telling preppers to stack to the rafters. Yeah, makes you wonder. And if you are a prepper and you are prepared for what's coming, what plans do you have to protect what you have from the looters? What are your thoughts? Put those comments down below. Thank you very much for watching. Thank you for subscribing. Please stay safe, and I'll talk to you later. God bless you. Bye.